Welcome to the Telltales podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, the U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Mike used to brag about the weather in San Diego, but now that he's in Paris, I have to leave the bragging to Jason, because I don't think the weather in Paris is as good as the weather in San Diego.
That's a beautiful day here.
Yeah, you got us beat. It's been raining for a couple of days straight, and it's going to rain more tomorrow. So it is definitely spring, which is nice. I mean, we don't really have a much of a normal spring in San Diego, but so it's good to experience some weather, which we don't get actually a whole lot of in San Diego.
Good. I think we can start. Exhibit C, we've got quite a lot to cover today. I was talking with Mike this morning. I think we have enough for 3 Wednesdays. But we'll do our best to cover as much of it today as we can. I'm going to not spend too much time on the last 3 exhibits. Price of oil is still hanging in at 80. I think the way to look at it, explained in prior Wednesdays, is $60 is where oil might be without risk premiums. I think there'll always be some risk premium for oil, but isn't necessarily $20. But the combination of Gaza and the Middle East in general and Ukraine is most of the risk premium. If both of them got settled, would the risk premium go to $10? Yeah, so that might make a $70 oil price. The problem, and the reason I say $60 is, for those of you who have Exhibit C in front of them, that surplus capacity of over 4 million barrels, oil demand only grows about 1.5 million barrels a day. So you got 3 years of growth there in surplus capacity. So, you need a lower oil price to have supply adjust to the demand. But for the moment, we're okay. Natural gas, where we've had oversupply, interestingly enough, the industry doesn't have an OPEC, but they have brought dry gas production down. That 103 forecast, here's on Exhibit B for 24, actually looks a little high now. And the Platts documents running at par. Now, the tricky part of it was 104 last November. So it's definitely some curtailment. It's not just reduced drilling in the Haynesville. And there is the next pipe from the Permian will open in August, and that will be 2 Bs a day of gas into the Gulf Coast. So natural gas, as you can see, the near month is 270, which is up a lot. 25 average in the futures, 360, and 26, $4. We are going to have a lot of power demand, not just from new data centers, but also from heat, from too much reliance on wind and solar, which are not baseload. So the power market and the gas market will be very volatile. But I am a little concerned when that associated gas from the Permian hits the Gulf Coast. I hope we don't see a dip in gas pricing. Exhibit A, can we get our deficit down to 1.5 trillion? At 1.5 trillion a year, getting monetized by borrowing the money, will we remain the world's reserve currency? What else has the world got? I mean, you have the euro, the yen, the yuan for China. I do think it's possible that we will have world central banks diversifying, not just keeping dollars, but also keeping euros and yen. I don't know whether they'll do any yuan, because the Chinese don't really have an open market for their currency, but maybe a little more gold. So I do think that people will start to diversify away from the dollar. how much of a risk is that in terms of keeping your base rate in the economy, say your 10-year treasury up? Let's put it this way, it's not a positive. Will the Fed, 4 more years of Biden or with Trump as the new president, be more inclined to allow a policy rate, they call it now, not a Fed funds rate, run at a higher level? I think so. I think what the Fed is thinking is that the policy rate or Fed funds rate ought to be about 100 basis points more than the rate of inflation. So if the rate of inflation gets down to 2.5%, say within hailing distance of their target of 2%, 2.5 plus 100 basis points is 3.5. I think at 3.5, there'd be an arbitrage between borrowing short and buying 10-year treasuries at 4.5, which is about where they are now. But there's such a huge supply, not only from the $1.5 trillion of deficit, but also from the Fed bringing its balance sheet down. Just remember, its balance sheet, we basically financed the deficit in 20 and 21, which was, average $3 trillion. We financed that by having quantitative easing. So the Fed balance sheet ballooned up and they're bringing it down. So if the Fed balance sheet is coming down by $1 trillion a year and the deficit's $1.5 trillion a year, that's $2.5 trillion that has to be financed. So it's a difficult situation for our economy. Doesn't mean to say that all of a sudden everyone, foreign central banks start to keep their reserves in euros, but it isn't a positive for the US dollar. Anything else to add, Jason or Mike, especially Mike sitting in Paris? I'm sure most French economists would say that the euro's better grounded than the dollar, and a central bank should keep at least half of its reserve currencies in euros. But that's because the French would say the same thing about their wine or whatever else. Anything to add, Mike or Jason?
No, not on that. I mean, I would say that it's the cheapest. The dollar's not been this strong before in my life of traveling to Europe. So, I'd spent a number of years working for a Swedish company and spending a lot of time back and forth, including living there for a year plus. And it was very expensive on the exchange rate. And today it's, I wouldn't call it cheap. There are cheaper places you can travel with dollar, but it's certainly better than it was. And then the only other thing I'd mention is there's a big merger announcement in oil.
Yeah, the oil industry is consolidating. I don't see any logic to it, to tell you the truth. My mantra is that if you're in the upstream side of the oil and gas business, you have to be able to increase your production 5 or 10%, spending half your cash flow. If you can't do it, you should merge. And I'd say that Marathon's not confident they can't do it. And I'd even go further and I'd say Conoco's not sure that they can do it, but you can kind of fuzz it up by doing these acquisitions. So it's a way to kind of avoid having to admit that you can't perform at the level that investors are looking for. We have a special surprise for Jason. And this isn't rehearsed, Jason. But we have a question for you because we get to the front of the memo now. And of course, Nvidia announced their earnings and they're fantastic. Nvidia is selling their chips at the rate of, 110 or 120 million a year. Is that sustainable? So here's a way we can address that. We can address that, I think, by saying, how do you put together a large language model? Obviously, you need a lot of those GPU chips. But here's a question for you, Jason, and you're uniquely qualified to answer this question. Suppose we dialed back and you were trying to do a large language model before the internet. What would your source? How would you do that, or would it just not be possible? Let's go back, 30 years or however long we have to go back, so that you can't scrape the internet for information. How would you do a large language model?
Yeah, not taking the cop out that it's not possible. So, Encyclopedia Britannica would probably be your best source, and someone probably has that in, whatever was before Word, Word Perfect or whatever word processor that it was originally typed up in before it went to the publisher. So you would want to get your hands on that kind of source. That said, it's not, it probably wasn't written. I haven't seen one of those since I was a child, but it probably wasn't written in everyday speak. So getting your hands on how people communicate and talk to each other, that's going to be the challenge. Editorials, op-eds in a lot of newspapers maybe would be your source. Yeah. Magazine articles. Even then the thing about these language models is you have to feed it tons and tons and tons of data to make it worthwhile to learn all the patterns of language. So, even at that scale, you're going to be challenged to, if that was your input data set to some like GPU cluster today, even that might not be enough data for you.
Mm-hmm. Mike, any commentary on that?
Sure. What I'd add to that were the journals, scientific journals, and then textbooks. So those categories were all printed, but each of the publishers of those journals and those textbooks also would have had that information. The reason I think it's all really interesting to think about is, what if the web wasn't open? And I think we're moving in a direction where more of the web is becoming closed, which makes it harder for those data sources to get into the models. If you are one of these closed properties, you want to keep it closed because you'd like to be able to extract some value for the data if you can. And we've seen that with Reddit starting to deal with OpenAI.
When you said that, I was thinking maybe not harder, but much more expensive. You're going to have to be buying these from all the social media companies.
Yeah. If we were at a planning session of OpenAI, I don't know how many years ago that was when they pulled together and decided. Remember, it started as a nonprofit. If we were Sam Altman and whoever was there, you just gravitate towards Reddit, Jason and Mike, or how did they envision sourcing the information for their large language model efforts?
Love to know the answer of what they thought would be their sources of data and what scale they thought they needed in text. Reddit would be a good choice, but like Twitter's great, or X as it's called now. If you can get your hands on all the posts on, say, Facebook and Instagram, those would have been really good sources. I mean, I know that they scraped a lot of Wikipedia and pages like that as well. So that's kind of how you build a knowledge base in it, along with teaching it how to stick words together in a pattern that we call English.
So how much of an advantage does Google have, given the database they have for search, which is pretty extensive and also up to yesterday or an hour ago or what have you? Does that just give Google an overwhelming advantage against someone like OpenAI, or is that a manageable disadvantage from OpenAI's point of view?
I think it's an advantage. It's a huge advantage in one respect, is these language models. When ChatGPT first came out, it was only good up through the knowledge of the internet in 2022, I believe, some point in time, April of 22. I forgot exactly where, but they take a snapshot and they train it on all that data, and it doesn't know anything past that snapshot. So where Google has this huge advantage is they've had decades of building this infrastructure that crawls the internet constantly, and they can build an index of text of what are the news sources and what are people saying, yesterday, what happened yesterday, and then can they incrementally train their models on that, and then have the AI provide you answers from news sources that were published yesterday. So I think they have a huge advantage there specifically.
But that's still a step behind Twitter in a way, because Twitter is basically where all the news originates. So, yeah, I think I agree with you, Jason, but I also think that web crawling is not exactly, yes, Google does it better than anyone else, but web crawling is not exactly cutting edge technology anymore.
No, and I know you and I've talked about this, is what happens with the open and closed web. If we stop going to Google and searching for pages from news sources and then going to those pages and looking at them, instead we're asking a chatbot to synthesize us the news based on something. Do those news sources, does the Washington Post have a sustainable business if people don't go to their website anymore? Where do the news sources come from then that these chatbots ultimately learn from? So that's kind of the scary thing to me is we lose our data sources, and then these chatbots are worthless again. Not again, but they've built this value today, so you don't want to lose it. And maybe Twitter is such a great resource because that's where people are going to write about in real time the news going on.
So here the concept would be that the Washington Post, the New York Times, the Wall Street Journal, whatever papers we're reading, I think way more than half their revenue comes from paywalls. And if people start to get their news from large language models where the raw material is things like Twitter, people stop paying to get the digital Washington Post, New York Times, Wall Street Journal. So then the paper's unable to continue to pay reporters, editors, and whatnot. Now, there is some litigation. I mean, I think the New York Times wanted to be included in Google searches, but they're objecting to OpenAI using them as as part of their source. That litigation presumably will grind on for a couple of years. None of the three of us have any expertise in terms of trying to predict the outcome of that litigation. But I think it's safe to assume it's a 12, 18, 24-month kind of process. So in the interim, yes, these closed, with paywalls and whatnot are an endangered species. Or is that overstating the case, do you think, Mike?
Well, as far as the litigation goes, the lawyers always win. So there's plenty of lawyers that are now specializing in this stuff. And Jason and I actually have a brother, his younger brother ended up going into that field as a result. And it is working out for him, apparently. On the will paywalls and walled gardens, will that structure persist? I think so. I think the incentive to publish content that just gets scraped isn't that high anymore if it's not driving traffic. So, as long as Google search is still driving a lot of traffic for a lot of people that are publishing stuff on the free and open internet, it'll continue. But as that diminishes, likely what will happen is there'll be other channels that'll be more fruitful from a marketing investment perspective rather than publishing free stuff on the internet. So and that's one of those things that you to think about. One of the weaknesses for Google is if everybody goes to LLMs, nobody's producing content that's freely available. Flip side is people are going to be producing content one way or another in different places. So whether that's YouTube or something else, Facebook, whatever.
Jason, Nvidia and their CEO say they hope that one of the things that will happen is impact on healthcare. I guess bringing medicines along faster. If you're building large language models for that, do you develop your own? If you're a pharmaceutical research operation, or will there be data sources that can be purchased, or how do you see that happening?
I suspect there will be data sources that you purchase. Someone's going to aggregate the data, cut deals to bring in data and have a product that they sell. I think it's a big challenge for a pharma company, who's not specializing in software to tackle that. So I think a third party, an outsider, is gonna do that. That said, they might end up with a software package that they sell into as an enterprise software application that you put your data into, and then your own proprietary data becomes the source of the chemistry that you're exploring or searching through the research reports and data that you've accumulated over the years. So I think an outsider will provide it. I don't think they'll build it in-house.
I might take the other side of that you have a lot of incentives to consolidate, I think. And it would be kind of crazy to think that healthcare would own a drug company, but given the data that they have as an insurer and owning it, having some hospital, I believe they own some hospitals as well too. So if you can assemble all sources of data, you have a very unique data asset. The thing that's kind of plagued the industry for a long time, and everybody's been aware of it, is the fact that everybody silos their data and they're afraid to share it because of, legally they can't. And even if you dedupe it, if you de-identify, you can still end up tripping over yourself, and it can be very expensive if you screw that up. So if you do it all in house, maybe there's a case there.
Yeah, I don't think we're going to see sharing. Your research was accumulated in your field of expertise, and you don't want to give any competitor insight or advantage into developing a competitive drug.
Jason, do you think pharma research operations are going to want to have their own data center rather than use Amazon or Microsoft or Google just for security of data? Or do you think that the cloud companies are as secure as any you could reasonably expect?
I think today they may say that they want their own data center, but I don't think that will happen. The expense of building and then operating this data center is going to be enormous, and these cloud providers are really good at segmenting data now and protecting it. So I think they're going to have an enterprise solution that says, your data is siloed here. No one's going to have access to it. We're not going to share the models, and it'll be in contract. So maybe that's kind of hard to prove, but I think the trust will be there. A lot of healthcare data is moving to the cloud anyway, so the FDA is getting comfortable with co-locating data with other people's, intermingling, not mingling it, but co-locating in a data center with other data out there.
All right. Get back to page one. Any update on Apple's choice between OpenAI and Google or Meta as a third candidate?
Well, I think what we saw in the news is that we're fairly confident they have already signed a deal with OpenAI, and likely will have some sort of deal with Google as well, so that you can have the option. And maybe that won't come right away. Maybe initially it'll launch with OpenAI, and the Google option will come later. So we'll see how all that plays out. There's a lot of calculus here, both for OpenAI, for Apple, and for Google, especially because Google forks over a lot of cash to Apple for that default position. So even though it seems kind of likely that 75% of people would probably switch over to Google voluntarily if they were forced onto a different search provider. And if they did that, they'd actually net save money. So You got to figure some of that calculus is flowing into these negotiations. I think Apple at the end of the day really just wants the best one. And that's probably, it makes sense to go with OpenAI at this point because they seem to be the least tethered. And maybe there's not so much bad blood with Microsoft that they can get over whatever relationships problems they've had in the past. So,
yeah, I would add that we've been talking a lot about the importance of data sources today. So Apple is going to be first party to the data going into either of these models, whichever you pick, if they give you the choice. So they're going to have the input data. They're going to have the training data before or as it goes to OpenAI and Google.
So do you think that, I don't know how many iPhones are out there, 1.5 billion or some very large number. Do you think that Apple can scrape data from their iPhone users the same way that Google can accumulate the data that they base their search effort on?
Oh yeah, absolutely. I think they're looking at all the traffic that you're doing within the apps that were sourced from their app store. You know, and that's a lot of the reason they don't want to give up access to where Europe's forcing them to have third-party app stores. They don't want to give that up because then they claim to be first party to that data, which they do through their app store today.
You think that the Samsung product, Galaxy product, where they say they have AI capability, I guess in alliance with Google, if the iPhone 16 is delayed or people are disappointed with it, does Google in the high-end phone business lose market share to Samsung? Is it possible that they would lose? You envision either one of you or friends switching from an iPhone over to a Samsung product?
I'll go first, and I say that people won't switch. That said, the thing that's making me want to switch is the size of the latest iPhones. I still have one of the iPhone minis, and I don't want a phone any bigger. But the lock into the Apple ecosystem is so great that I don't think people will switch. The Samsung phones have had better capabilities on, cameras and photo editing and that kind of stuff for years now, and we haven't seen many people switching.
All right.
Yeah, I'd agree. I think you'd have to see them fall behind, more than a couple of years before you see major switching.
Right. Would that influence Apple in terms of choosing between OpenAI and Google, do you think? The fact that Google's pretty closely allied with Samsung and other phones that compete with iPhones?
It's a good question. I guess the question is the OpenAI implementation for Apple better, worse, or the same versus Gemini? And, we all watched those demos we talked about a few weeks ago, how they kind of seemed like auditions for this Apple project, right? The singular model, the much faster response times, the various capability. It almost seems like it came from a statement of work. So I would just based on what we saw, most of the Google stuff wasn't done yet. It was vaporware, and the OpenAI stuff not only is done, but it's in production. So I think on that alone, Apple might have to go with OpenAI.
Hi, I'm Allie. I'm a 17-year-old racer, and I grew up in San Diego, California, working with a lot of dinghies. But in 2022, I came to Oak Cliff to pursue a match racing program. And since then, they've had me do high performance, offshore racing, inshore, pretty cool inshore races. Everything is going on here. And recently, I just raced the Block Island race on our OC86, which was a team incorporated of all ages with a variety of skill levels. And we were able to work together throughout the race to improve each position's on the boat and we push really hard to the finish. But today we're rotating around a little bit and I'm hopping in a match 40, helping coach for our Wednesday night racing series. And I'm looking forward to a whole ton of more exciting events in the future here.
And now back to the show.
We're pretty well blown through our 30 minutes. Next week, we'll update page 3 with the new Nvidia numbers. But what this all relates to, I think, is how long can Nvidia sell 100 billion and growing of their chips, considering if you just scan page 3, I have Nvidia at 60 billion. Obviously, that number is going to have to move up considerably. The dominance of Nvidia against AMD and Intel is awfully well established, and that free cash flow at 25 billion adjusted for the first quarter, that's going to be like 50 billion. If we turn back to page 1, 50 billion, now granted, it's, the year that at 870, the stock market value was 2.2 billion. At 1100 or whatnot, it'll be pushing 3. You go back to page 1, Apple's just about 3, Amazon's around 2, Alphabet's 2, Microsoft's around 3. It's just extraordinary that, what was a company producing GPUs, running games, has just, catapulted past everyone and become much more valuable. I mean, none of this can be built without Taiwan Semiconductor. And, Taiwan Semiconductor is, 600 or 700 billion of market value. Can't make it without the ASML machines. Lithography, market value 400 billion. Intel, which used to dominate CPUs, under 200 billion in market value. And it, I have to say, in all the years that I've been working on investments, energy, and then branching off into non-energy, never saw any phenomenon like this. And just in closing, Mike or Jason, you may, having followed tech for so long, remember a move as significant as this, but it's beyond my memory banks. How about the two of you?
Certainly not at this size, right? So the sheer dollar volumes are so high. It's really, absolutely stunning.
Yeah, they're hitting growth milestones that we expect of startup companies.
Yeah, as far as the pace.
A very large stage.
Yeah. But doing $50 billion in revenue.
Yeah. And absolutely no outside financing. I mean, Nvidia hasn't raised money for anything in a decade or more. I mean, they've done it all with internally generated cash. So very impressive. With that, everyone be well and stay healthy, and we'll continue this discussion next Wednesday. Take care, everyone. Bye-bye.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to and no reliance should be placed on the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.